Good Thursday morning, Market Chameleon community, and those joining us for the first time. We thank you so much for taking time out of your day to join myself, Will McBride, and there he is, Dimitri Pargamonic, the King Chameleon. How you doing, Dima?
Good morning, Will. How are you?
Excellent. You want to start with the disclaimer? It's up and in full view.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer. And
excellent.
Let's get started. I'm going to share my screen. So I'm going to try to get to some questions that we had in the morning, and then maybe follow up with an outstanding questions from yesterday's show. If you guys have other questions, put them in the chat. Will's monitoring them. He'll read them back to me. If you want to ask your question directly, we're putting out a link to the Zoom meeting. If you click on that, it takes you over to Zoom, and there you could raise your hand because we're broadcasting on Zoom as well. You could raise your hand. You could ask your question live. You don't have to turn on your video camera. So that's the two ways to do it. Yesterday, I think we were going over early exercise risk. One thing I didn't mention yesterday, we talked about an option could get exercised after the market closes. So if the stock moves after hours and an option goes from being out of the money to in the money, somebody who owns that option can still exercise it. And if you're shorted, you could get assigned. One thing I didn't mention is you could also put in a do not exercise. So an option could be in the money, and the stock after hour moves to the point where that option is no longer in the money, and the person who owns it decides, well, I don't want to exercise it. The stock I have a call for $25. The stock closed at 25.25, but after hours it's trading at, bad news came out, it's trading at 22. You could put in a do not exercise, instructions to your broker. Those will not get exercised because you don't want them at 20, you don't want to buy it at $25 anymore. The stock's much lower. You could buy it in after hours cheaper. And if you're short that option, it's a possibility that you don't get assigned on it based on that as well. So those are kind of when you're managing positions, and especially around expiration, a lot of people tend to either want to close out of it, or you have to make those determinations. What is your risk? So let's move on. We're going to start out today we'll take a look at the pre-market report. Then I have a few questions. I think I'll answer that came through the email, and then we'll talk about theoretical values. Somebody asked that about the options chain yesterday while we were on there. I'm going to continue on with the options chain and the theoretical values and what did they tell us. Okay.
Perfect. Rob, who asked a question in the email, is actually on and has mentioned that he sent that email. And also, we did have a request from Fant, who was asking, when you go through the options chain theoretical, if you could use the symbol SIGA. The thing is that it's a really low price stock. I don't know if it's going to achieve what you want, but if it works, SIGA.
Okay.
All right.
I'll take a look. Usually, a low price stocks are harder, especially when the options are all out of the money. But I'll take a look at it anyway. See what's going on there. So,
all right.
Pre-market report. These are stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, the biggest percentage decliners. Coming down here real quick to see 43 stocks made our percentage gainers list, 31 on the percentage decliners list. So a mixed bag, a little bit more favorable towards the bullish side at the open. Let's take a look at the S&P 500 stocks if we see a similar situation. So I'm coming up here to the filters, and these filters will control the report down here. So let's look at in ETF. I'm going to drop that down, choose SPY, S&P 500 ETF. So this filters out the components in the S&P 500. And here I see that 8 stocks made our percentage gainers list. They're now on the percentage decliners list. So not a huge list, but it looks like a more favorable or bullish bias at the open. And we kind of just see, just scanning with my eyes and knowing what these symbols are, it looks like a certain, what is this, like the casinos, the two top are the casinos, right?
Las Vegas Sands and Wynn Resorts.
Then we have, like, what are these, cruise ships, I think, in there. Then airlines. So all of these are rebounding. I guess maybe some good news on the coronavirus, or on the travel end. So we're seeing that theme right now getting bought. So no questions here. If there are no questions, there were 2 questions that came up through the email. One was, where do I see the holdings for ETFs, right? So if I want to see the makeup of the ETFs, where do I go to see the holdings? And so there are 2 things right now to mention about. So we do have holdings for the ETFs where you would go here, like I'll go to SPY, and under ETF info, if you see this tab holdings, you could click on it. This gives you the information about all the stocks, right? These are the stocks in SPY. These are the weightings, market cap, dividend yield, and so forth. Now, right now we're compiling that data. So we're not getting all the ETFs, but to let you guys know, right now we're actually just licensed more data for ETFs to get all of them. So you might not see certain ETFs at this point. Okay, we kind of are compiling the data for the major ones, like iShares, S&P, and so forth. But instead of doing it internally, we are licensing that data. Continuously, as we expand, we go and buy more and more data to make it available to you. So I think that maybe Rob mentioned it could have been an ETF that we're not getting currently, but I could tell you that even today as we speak, we're working on, because when you license the data, you have an API, you have to bring it into your database, you have to clean the data, validate it, then put it on your website. So it will be available, I think, in January. I think we're going to get we should get like all the ETFs or most of the ETFs. So if you're not seeing some of them right now, that's the reason, because we're only going for the major ETF holdings, but they're coming, okay, with other data. So we are expanding the offering on the ETFs, okay. And I think one of the ETFs he mentioned, we do not, it's a newer ETF, so we don't have the holdings for that right now.
Perfect.
Okay. Another question really quickly, I think that came up is, where do I go to see the largest implied vol movers? That came through, if you're watching, under options. I believe it is implied volatility movers right here. So if you go under here, implied vol movers, this looks at the money implied volatility for different expirations on all these stocks. So you could just kind of see the percentage changes up and down. You could sort it or use these filters, but that's where you could go and find the implied volatility movers and the volume and so forth on that particular option expiration. So those are the 2 kind of questions that just came over. Hopefully, if there are follow-up questions, let me know, Will, but just wanted to get to those.
Rob said thanks. And when do you think that ETF data is going to be available on the Chameleon?
So right now, we are, we did, we have a contract, we license the data. We have the, we have the API, so we're putting it right now into our database. There, because it's coming from a different source, and they have their data is a little bit different than what we have it right now, so we have to kind of fix that up. And they do have other data, I think that's going to be valuable that we don't have, and because of that, we're expanding the database, and then we have to decide, like, how do we present that data, where do we present it. And one of the things that, besides seeing the holdings in all these ETFs, we will be tracking much better the inflows and outflows. Okay, so there's going to be a better tracking of inflows and outflows, and because of that, I think we're going to start working around that to give you guys, like, really more insight and information, which stocks are actually getting accumulated, which stocks are getting dumped, where. So we're going to be aggregating a lot of data that we didn't have access to before. So that's also making us create additional tools. So I think you guys are going to be pretty happy, because I was looking at the data, and information, and I think that it's going to be actually look, pretty good. You'll see new analysis, new insights into the market, besides just, like, getting a list of the holdings. And we bought, I think, a history going back, I believe it was, I have to look again, but at least to, like, 2015. All right, so we have a history of going back to 2015, and that gives us, the ability to then create benchmarks and so forth. All right, but I think, to give you an estimated timeline, I think maybe we'll start seeing some of it coming in by the end of January. All right, because we have a lot of tools there we're developing right now. I think by the end of January, we should start seeing some of it coming in.
Yeah, it's so funny. So we talk so much about the options that sometimes you forget we have the ETFs. Well, I forget. I shouldn't say we forget. The dividends. There's so much rich information on the site. It's incredible.
Yeah, and the ETFs, we started developing tools and stuff, and we don't talk about it that much. And I think that, once we get some more data in, we're going to be able to actually, get a much clearer picture of, like, from a holistic point of view, and then I think it's going to give us a lot more insight than we have now. So hopefully by the end of January. And I give estimates, but I don't know, because our developers, as they're developing, and then as I'm testing, if things come up, sometimes we go back to the source and have to ask them what's going on. Maybe they have to fix it. So but we are getting it from the source we believe is, like, the best at compiling ETF data.
Perfect. So we did have another question about developments going on. One of the longest running chameleons, our friend Mike from Tyler, Texas, is asking, what is the status of calendar diagonal spreads?
So the calendar, right. So right now what we're doing is the calendar spreads. I'm not creating a screener. I'm not starting out with the screener there with the calendar spreads, but what you'll see is it's going to come out this way. It's going to come out as an alert. So it's going to be part of our alert system. And as I'm working on it, as I'm working on the calendar spreads, you can see here, you don't, by the way, right now, you guys don't have access to it. I know I get emails like, how come I don't see this on mine? This is in development. You're not going to see it because I'm still testing it out looking at it. And what I did was I started to kind of in the blog talk about calendar spreads and how do I describe them, because besides the alert, I'm trying to describe, what's going on, why it's, why did this alert come out? So instead of a screener, what it will be is initially part of our alert system. The way the alerts will work is it's once it hits certain preset conditions, it will alert to certain calendar spreads that look good potentials, like a buy or sell. And the alert system will also try to push out symbols and strategies that are based on, what you're clicking on more. So as you're clicking on more of something or looking up more of certain symbols, the alerts will try to alert you to that. It'll weight it more towards that. All right. So in the background, it's just calculating, we're not sitting there like watching it. We wouldn't be able to do that. But as you guys are clicking around, searching symbols in the background, once if you're registered or subscribed in the background, it's going to just calculate based on your searches what kind of symbols and what types of strategies you're most interested in, and it's going to try to push out alerts that we're getting in the background. All right, so when is that coming out? I'm hoping by February, but this, it's a complicated system, what it's running here. And as I'm trying to, and it's new, very new. We haven't tried this before. So I'm trying to get it to the point where I think it'll be good, stable before we put it out, because anytime we have a new feature, we try to test it internally as much as we can, and work out all the obvious bugs that we see. But once you let it, you unleash it and, thousands of people are using it, all of a sudden there are issues and people are using it in ways we did not anticipate, right? And there's no avoiding it. You try to work out as much as you can, but once you kind of put it out there, people are using it in ways we did not expect. So
yeah, well, it's already leading to more questions. How will we get the alerts? Will we be able to get it in a text? So there are all sorts of questions around these alerts.
Yeah. So no, initially you're going to have to go to the website and just, bring it up, and that's how you're going to get it. So it's not going to be like, you're not going to get texted. We don't have a texting infrastructure, to alert this way. But the initial state, you go to the website, you get the alerts there, when you're ready to look at them. I'm going to be doing shows on them once they're out there to show you, well, if you click on it, here's the explanation. Here's how you could go do further analysis below. So you could see the setup. And then if we work out the kinks and everything looks good, the next thing we'll probably try to put that on a mobile device. So then at least, you're not going to get texted to it, but if you go and log in on your mobile device, you'll be able to see the alerts from there. So that's how we envision it.
Well, there you go. We did get a question from Trevor, and this could maybe be a show on Monday. He's asking, can you discuss option implied move versus historical move? And that could be maybe for another show. Unfortunately, I just think your mic went underwater, D.
How does it sound right now?
It's
just unplug it and
it's garbled.
Is that any better?
No, unfortunately, it's not.
No.
You want to go out and come back in?
All right, let me try that. I'm going to go out and come back in. Be right back.
Excellent. So D was showing something. I don't know if anyone picked it up on the blog. If you go to blog, it looked like you may have pulled some of that information from the trade ideas and put a little blog together. So if everyone looks at the blog, you could read the information he's written about something that he may have picked up. We'll ask him when he comes back on, I guess it was Procter and Gamble. Also, if anyone missed it this week, we did a webinar with Raj, and it was quite a good webinar. For those who don't know Raj, he and Jake put together a Discord channel. I can put that link in there. It's free to join. It's made up of a lot of chameleons and other traders, and they discuss certain ideas. So if you're new to the chameleon community and today's your first day, it's a good group to join. Runs all day. You can ask questions. If you're a newbie, it's very helpful. If you're an active trader, it's some place to go bounce ideas off. So I'll pop that into the chat as well. And keep those questions coming to support. Drives a lot of thought for Dimitri and myself. So it's great stuff. Are you back, D?
Yeah, can you, I'm trying to share my screen. Can you see the screen?
Yeah, perfect.
Okay.
I did notice, and I was mentioning it while you were coming back, when you were on the trade ideas, it looked like you clicked over to PG and it went to the blog you created. Did you get that blog idea from Trade Ideas?
Yeah, so the blog right now, what I'm trying to do is kind of put out a, and I'm just kind of seeing if people are reading, if they're enjoying, so far we kind of put it out there. I'm not even sure if people know that it's out there, if I get any feedback from it, but when the best way to kind of structure and describe the trade ideas. So, so I've been putting it out there just a couple of days now to see, if I get any kind of feedback from it, but that would be something, those were ideas that came through our alert system, right? So I took a couple of them and just came up and said, well, let me just write up a blog, see how people, react to it.
Oh, great. Well, yeah. Everyone's aware of it now, so that's cool.
So really quickly, I'm going to, unless there are more questions, I'm going to go to the options chain, kind of talk about theoretical values. And I think somebody asked what's the difference between an implied move and a historical realized move.
Yeah,
so
that was
maybe
Trevor.
We'll try. Okay. So let me try to see if I could answer that while I'm talking about the options chain. So I'm here on the unusual option volume report here, and I see like a stock ARQQ. I'm going to click on that just to go to the options chain. And somebody asked, well, what are the theoretical values on the options chain telling us? Like, why do we have? So here I'm on ARQQ. Down here, we have a table. We talked about the options chain where you have the bids and the offers. You have the volume. You have like your deltas here. And then you have this thing in the middle, theoretical values. And so why do we have theoretical values? And it kind of comes to the point where right now we have option market prices, right? We know like the bid and the offer, and we know what the market in a particular option is. What are people willing to buy it for? What are people willing to sell it for? And that we call it the fair market value. The midpoint would be the fair market value. And so if that's the market value, why do we need a theoretical value, right? And the theoretical value is a benchmark so we could see how the markets are pricing something relative to an estimated value. And there's no one way to estimate a value because you could change your data and inputs and assumptions, but in general, you use an estimated value to see where are the markets currently pricing relative to where you would normally expect it, or reasonably expected based on historical data or any type of other inputs that you may be putting into your estimated value. And it becomes important, and I'll show you some examples of one. It could help in your decision if you're looking to buy or sell an option or do certain strategy, or it could just tell tell you something about what the market is signaling, right? Like, what is the market maybe signaling to me based on where the markets are versus estimated prices. And as professionals, as a professional trader, you're always using some model to estimate, right? Because you have these market prices, but you're always using some kind of valuation model, something to estimate the value to get a sense of where these options are, right? I think, and I always say that Warren Buffett really put it in a really good, succinct way. He said, price is what you can pay, right? So this is a price. If I buy this, price is what you pay. Value is what you get, right? So there's a price and there's a value. And that's what the theoretical value is. It's an estimated value to the option. And right now we're seeing these in the midpoint, and there are different models you could start out with. This one's called the best fit, right? You could run and say, well, you could run a volatility like the option pricing model in Black-Scholes and say, well, what would the prices be worth of these options if we said that the volatility of the stock will move at the same as the last 20 days, right? So if I do the 20-day average realized vol, I could put that in there, press OK, and then I could see that most of these are in line. When it lights up red, that means that the market is on or above my theoretical value. If it lights up green, the market's below, on or below. So I could run a different model and say, well, what if I used 1 year historical value? I could press on this, press OK. This is 1 year historical value. So you see they're kind of in the middle. Let me go back to the best fit. So the best fit is saying that I'll accept that the markets are kind of pricing volatility correctly, but I'm going to run a regression through and see if anything's out of line if I use a best fit regression model. All right. So I'm going to come out here and let's see what the markets are telling me here. So I'm going to come out maybe here to Jan. Now I'm seeing a bunch of stuff lighting up. I'm like, okay, what is the deal here? Because why, if I'm using a model, I'm using the best fit, why are these lighting up green? And why are these lighting up red? So now by doing that, the market is signaling to me something, right? And I got to figure out, well, what's going on here? What do I want to do? But the first thing is I want to just figure out what's going on. So let me just show you what the market is signaling here, okay? And, if you can use it to your advantage or disadvantage, depending on your outlook in the stock. When the calls like this are all lit up one way and the puts are lit up this way, by the way, I've seen other people who try to create theoretical values, they just put it right in the middle in between. And I don't think that's a good idea because then you're missing out on important information. So they'll recalculate a best fit cost of carry and just say, we're going to assign this like a dividend to make it fit. And I don't think that's a good idea because then you're just missing out on information because it'll start looking like this. They're just like, we'll just put it something. Oops. Why is this? 1 second. Let me refresh it. So when it's like this, it doesn't really point anything out, right? I have to figure it out. But when it lights up like this, it's pointing out something. And here's what it's pointing out to me really quickly. We're at 9:30. That this stock, because we don't have a lot of time, is difficult to borrow and hedge from the short side. So when you short a stock, you have to borrow it first. You have to locate it, borrow it. When you find somebody to borrow it from, then you could sell it short. But the market is telling me that right now it's very difficult to do that, and there's a fee involved to do that, and the fee is increasing, and maybe it's very difficult and might not even be available from anyone. So what happens is that the options are now reflecting that fee. And look at where the stock closed, $25.09, right? So if I buy this call, $25 call for $2.50 right on the market, and this is a wide market, but if I bought it for $2.50, right? And then I went and sold this put for $3.50. So I bought the call, sold the put on the same strike, right? I have received $1, right? I received $1 credit. And and this is 11 trading days to go. 11
What are you saying? You're buying the stock at 24?
So I'm buying the stock at 24, right? If you're buying the call and selling the put on the same strike, it's the same, it's a synthetic long. So it's like buying the stock, right? So here I'm buying the put, right? And I'm selling the call. And even on the markets, right, I'm getting $1 credit. So it's like buying, see, it's like, it looks like stock goes up, you're making 1-for-1 with the stock, it goes down, you're making, but you've received $1. So from 25.06, you could see, you're still making money, even if it goes down a little bit. And if it goes up, well, you not only does it, for every dollar went up above 25, you're making 1-for-1 plus an extra $1. So they're paying you $1, which is like what, 4%? You're getting an extra 4% for getting long with 11 days to go. Let's just say even a month. So you can imagine, like, if somebody was giving you 4% every month, that adds up to a lot in the course of a year. But this is what the market is signaling to me, and I was able to quickly assess that just because now I got those theos lined up. So if you're going long the stock, if you're very bullish, well, you not only, you could decide, should I buy it at 25 or can I do it synthetically and actually make an extra 4%? It's like an extra dividend almost, or you could even try to sell it above 1, because the market's signaling to you that they're really willing to pay up to get short this stock. And, now you could have a decision, should I pay attention to what the market is saying? Maybe this stock is dangerous, could really fall. I should pay attention to it. Or if I'm very bullish on the stock and I think, no, I do want a long position, well, now you get a chance to make an extra 4%, maybe even 8%. If you get it at $2, if you sell that at $2, that's like buying the stock at 23 with the stock at 25. So then you make like 8%. It's like getting an extra 8%. That's a big deal because it adds up if you're, over time, right? So again, if you're trying to get long the stock and you're looking at best ways to do it, this is just one scenario. I'm showing you how theoretical values, why we use them, because now we got a lot more insight. We see what the market's signaling. We see, well, what do I want to do here? And to do that, we run our estimated models versus the markets, so to get a clearer picture. Is that helpful?
Well, that was super helpful, D. We did a question. Trevor then had a follow-up question. Do you have the ability to scan for stocks based on theoretical versus implied move? Maybe that's something we can touch base on Monday. Tomorrow is the NYSE is closed tomorrow. It's a holiday. So this is our last show of the week
today. Yeah. So we'll see you guys on Monday. Guys, have a great holiday. Have a good trading day today. Good day. Stay safe out there. Hope to see you guys on Monday. Really appreciate all the questions. We'll continue on, with Trevor. I think I didn't get to the implied move versus historical realized moves.
All right, so we'll do that on Monday. D, great job. The Chameleons were super happy. We did have other questions about crypto and when that's coming. I mean, there's so much that the Chameleon community wants from, and it all takes time and energy. But thanks for joining, everyone. Thanks for the question. They make it super exciting to come and do this show every day. And Dee, great job. Thanks.
Definitely. Thanks, everyone. Stay safe out there.
Have a great day, Chameleons, and a great holiday. Bye-bye.